Stocks sold off, oil prices sold off, European markets, they did because in parts of numbers from China. Asian markets sold off. With more on the China connection to our markets here at home, we bring in the author of The Coming Collapse of China, Gordon Chang. He is with me now. Gordon, it's great to see you. Thank you for coming in, especially today when we need this global perspective. You know China so well. This manufacturing data came in at a 6.5-year low for China, which proves what we've all been talking about. Growth is slower there than we think it is. How much slower?
They say it's 7.0%, National Bureau of Statistics, but people in Beijing are privately talking about 2.2, and yeah, it's about 1 or 2. And if it's not there today, it's going to be there in a month or two because this economy is plunging fast.
So all indicators from there are really coming in at an accelerated rate. I was looking at some breakdowns, some interpreted breakdowns, and inflation indicators at the same time are really flashing red. I was looking at a couple charts that a friend of mine sent me. So, I mean, what can the Chinese government do at this point? Because let's face it, this is an inflection point.
Yeah, they've run out of really the strategies to do anything. You know, people talk about fiscal stimulus, as we just heard, but they've been applying fiscal stimulus now for several years, and you still have the economy plunging down. And in fact, even if it did create growth, and it will create some, the problem is debt, because they have a debt to GDP ratio of something like 350% when you properly count your GDP and when you include all the debt. This is a problem.
Gordon, on the flip side, China with its reserves could probably run out the clock, if you like, until 2020. But there's a lot of messiness that can happen, right, until then.
Yeah, they don't have a foreign debt problem. This is not Argentina. This is not Thailand. They have a local currency problem. And when you look back in history, the countries that have the worst crises are not the ones that owe to foreign creditors. They're the ones that owe it to themselves. That's China's problem right now. And that's what's going to drive this. You know, their strategies are just not working.
So can the government speed up structural reform? And actually, before you field that, I want to say, you know, even to your point about all the support, even banning selling, telling people you cannot take money out of this country. I mean, it's still not working.
Yeah, that's not working at all because now people are not putting money in. The only buyer in the Chinese markets right now is the Chinese central government. Every time the government buys, people try to get themselves out. Fundamental reform, they can't do it right now because of political problems. And Xi Jinping, the president, his idea of reform is going back to Maoist monopolies. That's certainly not going to work in today's world.
So, Gordon, what is the best case scenario for China right now and the worst case?
Best case scenario is 2% growth. Worst case scenario is Great Depression times for China. I think that they're heading there because they've got this debt problem. They can't reform. All the other strategies aren't working. They can postpone the symptoms, but they can't change the trajectory.
And just for people who might think like, oh, it's China, it's so far from here, it doesn't affect us here in the U.S. It very much does, to the extent of China's GDP. As far as size, it's a $17 trillion economy. The only one slightly larger is the U.S.'s.
Yeah, we saw this in Q2. You know, China hurt all those earnings. You know, you just talked about Apple. Well, Apple is relying on China for growth in the future. I don't think that they're going to get it there. And I think that it's probably, to use that analogy, it's a bad girl.
All right. Gordon Chang, love having you here. Thank you so much for the perspective. Gordon Chang with me there, the author of The Coming Collapse of China.